Hello, folks. Welcome to Hacker Trading. This is Harry Swaminathan. Today is August 7th, 2012. And what I want to show in this video is that, at least for the short to medium term, the S&P 500 may be getting on a bullish track. And there are a few different things that point to that direction, and we'll look at all of them. But from a macro standpoint, Europe is in vacation this month. August is a vacation month, and so hopefully there's no bad news that will come out of it. And given that situation, we want to look at what the technical patterns are of this chart. So this is the chart of the ES futures, which is the S&P 500 futures. It's a 3-month chart and it's a daily chart. So each one of these bars represents one trading day's price action. We can see that the last 2 or 3 months has been very choppy and it's been going up and down, but over the last few days there seems to be a bullish tone that's coming into the market, and that's exactly what we want to see. And if that's true, then what kind of strategies we want to put into our trades. And the outlook for this would be anywhere from about 3 weeks to about 6, maybe 8 weeks. And the potential is to make about 15% return during that time in about 4 weeks, average of 4 weeks. So let's take a look at this chart, and we'll see why this bullish pattern seems to be developing. So this is the volume right below the S&P 500 chart. This is the volume of the ES futures, and below that we have the MACD indicator, which is a momentum indicator. And the MACD indicator has crossed over to the bullish sign, and you can see that the histogram is getting bigger and it's getting darker. So this is an indication that momentum is building up in the S&P 500. You can see that the blue line is actually diverging from the yellow line, which is again a bullish indicator. But let's take a closer look at the chart itself, and I'm going to zero in on the last few days, because this is really where the volume analysis tells us that there is a bullish activity coming in. So I just zeroed in on that, and we're going to look at this particular day's trading. Let me get the MACD down, and I want to look at this day. This was on the 2nd of August, which is last Thursday. And you can see it's a down day. So the previous day had closed around 1372, and then we opened around 1359. So when we opened itself, there was a bearish tone to the market, and it probably tried to go up, but then it couldn't last, and then it went down, and finally it closed up at around 1361. So what is special about this day's trading activity on the S&P 500 is that, first of all, the volume is very high. It's about 2 million S&P futures contracts, which is good volume. Also, if you look at the bar itself, it opens at 1360, perhaps tries to go up, but then what ends up happening is it goes down to about 1348. But the good thing is it closed in a strong manner. It closed at around 1363. So what this tells us is, on high volume, there was support that came in and it ended the day on a strong point. So which is good. Now, now that's what we are looking for. It ends the day on a strong point, but we don't know if this volume is selling volume or buying volume. We know that it ended up pretty nicely, but what we really need to look at is the next day, which will confirm to us what the previous day actually meant. So on the next day, you can see we gapped up and we opened, and then from then it went all the way up. So now these two bars gives us a very good bullish signal, and that's exactly what we're looking for. So yesterday, which was a Monday, it was sort of a flat day, and today was a nice up day also. And you can see the 5-day, which is the blue line, the 5-day moving average has crossed over the 20. You can see there's good volume came in and supported it at this level. And then finally, we can see that the MACD is also moving up. It's diverging from the slow indicator, the yellow line, and you can see the histogram gaining in strength as well. So all of these indicators tells us that we potentially have a bullish S&P 500 for at least the near term. Now, this can obviously be invalidated if some bad news comes out of Europe. Granted, the politicians and many people may be on vacation, but the markets are not going to wait for them. If the markets feel that there's something wrong with the situation in Spain or Italy, then we could see a crash. And of course, those kind of fundamental events always trump your technical patterns. So that's something that we always have to watch out for. Now, in this kind of a scenario, given that we are looking at a bullish trend for the next 4 to 6 weeks, the kind of trades that will work are long calls, obviously, and also bull put spreads would be a good one, because in a bull put spread, you're going to gain from two different parameters. So you're going to gain from a movement in the price to the upside, because the bull put spread is a bullish spread. But you're also going to see volatility come down. If the markets are going up, the volatility is going to come down. And you're going to see a second element of profit from your Vega position, because a bull put spread is a Vega negative position. So you're going to see two elements of profit from your bull puts. So the bull put strategy would work very well. Now, obviously, anything can go wrong, because as we've seen in the last 1 to 2 years, any bad news brings the S&P down. So once we do have a profit, there are a couple of things you can do. One is, of course, you can close out your positions. If you're satisfied with your profit, you close out your trade. The second thing is, if you put a bull put spread on, you can convert that to an iron condor. So let's say the S&P goes up, it's right now around 1400. Let's say it goes up to 1425, 1430. That would give you your 10 to 15% return on your capital. And then what you can do is convert the bull put spread into an iron condor by selling a call spread, perhaps at the 1475 or at the 1500 level. So that way you're protecting your profit that you made from your bull put. So these are the kinds of strategies that are probably going to work. And if the S&P 500 goes up, then all the major stocks like your Apple, Google, Priceline, and all of them will go up. In fact, any stock that you're normally trading or investing in is going to go up for the next 4 to 6 weeks. Of course, you always have to be nimble and watch for anything that comes out of Europe. So that's it for today. Hope this was helpful. And if you have any questions, please send us an email at info@hackertrading.com. Thank you.